Hello and welcome to Austrac's AML CTF Essentials webinar series. This is the second webinar in a four-part series designed to introduce you to Austrac and Australia's anti-money laundering and counter-terrorism financing AML CTF regime. Firstly, Austrac acknowledges the traditional owners and custodians of country throughout Australia and acknowledge their continuing connection to land, sea and community. We pay our respects to the people, the cultures and the elders past and present. We extend that respect to Aboriginal and Torres Strait Islander peoples watching us today. My name is Hayley and I will be your presenter today. I'm joined by my co-presenter Nikki and we are from Austrac's Industry, Education and Outreach team. Before we get started, please note that the information conveyed in this presentation is general in nature and it does not constitute legal advice. You may consider obtaining your own independent professional advice, which can take into account your business's specific and individual needs. The content in this webinar is at an introductory level and more detailed information can be accessed on the Austrac website. We will use examples and explanations throughout the webinar to clarify various terms that you will see used under the AML CTF regime. These have been simplified for introductory purposes and do not comprehensively define each term or scenario. To support you in preparing for and understanding the AML CTF reforms and regulation, our team will be delivering a multi-tiered education campaign from now until your obligations come into effect in July 2026. Following the release of core guidance in October 2025, our team will commence tiers 2 to 4 of the education campaign, providing more in-depth information about governance, money laundering and terrorism financing risk, and your AML CTF obligations. We have developed a series of webinars to ensure you are aware of your AML CTF obligations and regulation. Our first webinar series is on AML CTF Essentials. As you can see on the screen, there are 4 webinars in this series. Webinar 1 provides an introduction to Austrac. This webinar provides an overview of your AML CTF obligations. Webinar 3 covers money laundering and terrorism financing risk. And the last webinar in this series is about outsourcing in the AML CTF context. While this session is about AML CTF obligations, please remember that Tier 4 of the broader education campaign will be focused on providing detailed education for each obligation once the rules and core guidance have been released. Today's webinar is more about introducing you to these obligations. Businesses that provide designated services under the AML CTF Act must enrol with Austrac. From 1 July 2026, this will include businesses providing new designated services captured by the AML CTF reforms. Once enrolled, you must comply with a range of ongoing AML CTF obligations. In webinar 1, we explained the role of Austrac and the purpose of Australia's AML CTF regime. In this webinar, we'll explain Austrac's risk-based approach to AML CTF regulation. We will also describe your key AML CTF obligations and explain what you need to put into practice. Again, the information provided in this webinar is an overview. More detailed information will be provided once the rules and core guidance have been developed. The first webinar in this series introduced you to money laundering, terrorism financing and proliferation financing. Money laundering and terrorism financing risk refers to the potential that criminals could exploit your business for money laundering, terrorism financing, proliferation financing, or other serious crimes. This might include disguising money or property that comes from criminal activities, or using money or property to engage in further criminal activity. Whilst we will briefly touch on risk today, the third webinar will explore money laundering and terrorism financing risk in greater detail. Understanding your money laundering and terrorism financing risk is crucial to protect your business from criminal exploitation and to meet your AML CTF obligations. This is why the AML CTF Act takes a risk based approach. A risk based approach recognizes that money laundering and terrorism financing risks are not the same for every business, customer, or transaction. Each reporting entity faces unique risks based on their operational context. The risk based approach provides you with the flexibility to apply your resources where they will have the biggest impact in order to manage and mitigate your highest risks. The benefits of this approach include a more efficient and effective use of your resources, minimizing compliance costs and burdens on customers, and greater flexibility to respond to new and emerging risks as money laundering and terrorism financing methods change. Under a risk based approach, you must conduct a money laundering and terrorism financing risk assessment for your business, and you must put in place AML CTF policies, procedures, systems, and controls to manage and mitigate your risks. These form part of what's called your AML CTF program. If you provide one of the new services regulated by AUSTRAC, you must enrol with AUSTRAC. Enrollment Enrollment involves providing basic information about your business, such as its structure, services, key personnel, and contact details. You must also update your details when they change. You must enrol with AUSTRAC within 28 days of providing a regulated service, known as a designated service, to avoid penalties. If you provide one of the new designated services, the new laws commence on 1 July 2026, and you must enrol by 29 July 2026. We ask that new reporting entities do not attempt to enrol now. We have seen a few early enrolments, however, our current forms do not yet include the designated services for new reporting entities. It is important to enrol with the correct services as these impact reporting obligations. AUSTRAC will provide updated guidance on what to do and new enrolment forms ahead of the new obligations taking effect. Virtual asset service providers must enrol with AUSTRAC and must also apply to register with AUSTRAC. If your business provides any of the new designated virtual asset services, these new laws will commence on 31 March 2026. This means that you will have until 28 April 2026 to enrol. From 31 March 2026, you must not provide virtual asset related designated services before AUSTRAC has confirmed your registration. Criminal penalties apply for non-compliance. Again, please do not attempt to enrol or register now. Further guidance on how to enrol and register and new forms for this will be provided ahead of the new obligations taking effect. AML CTF programs are vital to identify, disrupt, and prevent money laundering, terrorism financing, and proliferation financing. This protects your business or organisation, your community, and Australia from criminal activity. For this reason, your AML CTF program must be in place before you provide any designated services, and it must be clearly documented in writing. We touched on designated services more in the first webinar. Reporting entities must have an AML CTF program that sets out how you will identify, assess, manage, and mitigate the risks of your products or services being used for money laundering, terrorism financing, and proliferation financing. This must be appropriate to the level of risk your business may reasonably face in providing designated services. Reporting entities are businesses that provide designated services. Your AML CTF program must contain a money laundering and terrorism financing risk assessment, which identifies and assesses the risks of money laundering, terrorism financing, and proliferation financing that your business may face. And also, AML CTF policies, which appropriately manage and mitigate your business's risks. These policies must also ensure that you comply with your AML CTF obligations and must be appropriate to the nature, size, and complexity of your business. Your AML CTF program must be approved by a senior manager of your business. It must be kept up to date to reflect significant changes to your business or guidance released by AUSTRAC that relates to your business's risk. Your AML CTF program must be subject to appropriate governance. This includes oversight by a governing body and senior management and the appointment of a fit and proper person as an AML CTF compliance officer to oversee day-to-day implementation. If you are a sole trader, you can take on these responsibilities yourself. So you must have an AML CTF program in place that fulfills the outcomes we just mentioned prior to providing a designated service. Let's move on. Again, your risk assessment helps you to identify and assess your money laundering, terrorism financing, and proliferation financing risks. It must be the first step in developing your AML CTF program and shapes the AML CTF policies that protect your business. Conducting a risk assessment involves a number of steps. You must identify any money laundering, terrorism financing, or proliferation financing risks your business may be exposed to in providing designated services, and then you must assess the inherent risk. You must also continually monitor your risks for changes and test how effectively they are being managed and mitigated. As a reminder, the third webinar in this series will take you through the steps to complete your risk assessment in more detail. It will also take you through some potential risks for each of your sectors. Your AML CTF policies, the other part of your program, detail the steps you will take to manage and mitigate your money laundering and terrorism financing risks and ensure you comply with your AML CTF obligations. As previously mentioned, your AML CTF policies must be appropriate to the nature, size, and complexity of your business, appropriately manage and mitigate or reduce the money laundering and terrorism financing risks your business may reasonably face in providing designated services, and ensure you comply with your AML CTF obligations. After you develop your AML CTF policies, you must put them into practice and follow them in your daily operations. This means you apply policies to manage and mitigate your risks and keep records that show how you're doing this. If your risks change over time, so too should your AML CTF policies to ensure that any new or emerging risks are appropriately managed and mitigated. I'll now hand over Nikki to continue our discussion.
Thanks so much, Hayley. Really appreciate that. We'll now move on to personnel due diligence. As mentioned earlier, your AML CTF program must include policies, procedures, systems, and controls that appropriately manage and mitigate the money laundering and terrorism financing risks you identify. This includes the risks your employees may expose your business to. You must have personnel due diligence policies in place. These should outline when and how you will undertake due diligence on persons employed or otherwise engaged to perform AML CTF related duties. The purpose of personnel due diligence is to help you to determine which positions within your business could potentially facilitate a money laundering or terrorism financing offence, or may pose a money laundering or terrorism financing risk. To check prospective personnel, you can ask them to provide you with information or documents to help you to assess their suitability for the role, such as a police check. Essentially, you're undertaking checks to determine if they are suitable for the role. If existing personnel are moving to or being transferred to a new role, you should leverage your risk-based systems and controls to determine whether the role requires personnel to update or undertake further assessment. Some roles in your business might pose a higher money laundering and terrorism financing risk than others, which may require applying more rigorous screening for these roles. For example, roles with duties that might make personnel a target for collusion or coercion by associates involved with criminal groups. You must also establish and document processes to manage personnel who fail to comply with your AML and CTF program. Depending on the seriousness, this may include mandatory training to refresh their knowledge of your AML CTF program or disciplinary action. Further information will be released in Tier 4 of this education campaign. Now we will look at your customer due diligence obligations, which help you understand who your customers are and the money laundering and terrorism financing risks they may bring to your business. As part of your AML CTF program, you must document how you will conduct your customer due diligence. Initial customer due diligence involves establishing certain information about a customer before providing them with a designated service. This ensures that you identify and mitigate relevant money laundering and terrorism financing risks from the beginning of your relationship with the customer. You must collect and verify your customers' information. You can do this using reliable and independent documents or electronic data or both. Based on the information you have collected and verified, you must establish if a customer, beneficial owner, or agent is who they claim to be, are subject to targeted financial sanctions. These are domestic or international restrictions that prevent dealing with their assets and/or making assets available to them, or if they are a politically exposed person. A politically exposed person, or PEP for short, is someone who holds a prominent public position in a government body or international organization. This includes relatives or close associates of a politically exposed person. You can read more about beneficial owners and politically exposed persons on the AUSTRAC website. Ongoing customer due diligence involves monitoring and managing money laundering and terrorism financing risks throughout your relationship with the customer. This includes monitoring transactions and behaviors for suspicious activity, updating the customer's money laundering and terrorism financing risk rating in response to triggers you have identified, and reviewing, updating, and re-verifying information as needed. Your ongoing customer due diligence helps protect businesses from potential money laundering and terrorism financing activities. Now, enhanced customer due diligence involves additional steps or checks for high-risk customers. Enhanced customer due diligence is applied to new and existing customers in high-risk situations, such as when you're asked to provide a designated service to a high-risk customer, including a foreign politically exposed person, or when a customer provides inconsistent information. The customers you already have, they're called pre-commencement customers. Now, you will not be required to carry out initial or ongoing customer due diligence on a pre-commencement customer until you are required to file a suspicious matter report in relation to that customer, or there is a significant change in the nature and purpose of the business relationship with a customer, which results in their money laundering and terrorism financing risk being assessed as medium or high. This is intended to reduce the burden of regulating your existing customers while ensuring that they are subject to appropriate customer due diligence measures if their risk profile changes. You will need to provide AML CTF training for personnel who work in roles that you identify as posing a money laundering and terrorism financing risk. This is to ensure that they understand the business's obligations under the AML-CTF Act and rules, the consequences of non-compliance with the AML-CTF Act and rules, the money laundering and terrorism financing risks your business may reasonably face, the consequences of these risks, and your business's AML-CTF processes and procedures that personnel will need to carry out. Your personnel should also have an understanding of the changing behaviors, techniques, and practices of money launderers and people engaged in terrorism financing. Certain events may trigger training requirements, such as personnel moving between jobs or responsibilities, or their failure to comply with your AML-CTF program, the emergence of new methodologies as indicators relevant to your business, new information about money laundering and terrorism financing risks in your sector, and AUSTRAC issued guidance or feedback on money laundering and terrorism financing in your sector or your business's AML-CTF compliance. The content and frequency of the training will depend on their roles in the organization and the money laundering and terrorism financing risks your business may face. These guidelines should be documented in your AML-CTF program. Your business must have an appropriate risk-based transaction monitoring program to identify suspicious and unusual transactions. This includes monitoring for money laundering, terrorism financing, and other serious crimes when you provide a designated service. A transaction monitoring program is integral to your AML-CTF compliance because it helps your business to identify, manage, and mitigate money laundering and terrorism financing and other serious crime risks, identify and report suspicious matters to AUSTRAC, and meet your ongoing and enhanced customer due diligence obligations. You must document how you monitor customer transactions in your AML-CTF program. Your monitoring should be based on your business's money laundering and terrorism financing risk assessment and must outline the processes you follow to identify suspicious customer transactions. Your transaction monitoring program can be manual or automated, but must be appropriate to the nature, size, and complexity of your business. How you monitor your customer activity or transactions will depend on several factors, which include the frequency and volume of your customers' transactions, how you document and record these transactions, and the monitoring systems you have in place. Your transaction monitoring program must be designed to alert you to any red flags that may indicate criminal activity and trigger further investigation. For example, unusually large and complex transactions or transactions that do not fit a customer's history or profile. Also, unexpected patterns of transactions that don't seem to have a legitimate purpose, and transactions that involve people or locations on sanctions lists. AUSTRAC expects that your transaction monitoring program has an appropriate governance framework and oversight with sustainable and effective processes and controls. You should allocate appropriate resources and give priority to analyzing and actioning alerts raised by transaction monitoring. Your transaction monitoring program must also be reviewed regularly, especially if you notice your transaction monitoring does not create any alerts or raise any red flags, because your criteria for alerts may not be accurate. Webinar 3 in this series on money laundering and terrorism financing risk will discuss red flags or indicators in more detail. Your AML-CTF program must be subject to appropriate governance arrangements. This includes oversight by a governing body or senior management and the appointment of an AML-CTF compliance officer. The governing body is the individual or group with primary responsibility for the governance of your business. This group must exercise ongoing and effective oversight of money laundering and terrorism financing risk identification, assessment, and AML-CTF compliance. Senior managers refers to individuals who make or help make decisions that affect the whole or substantial part of your business. You can have more than one senior manager, and senior managers are responsible for approving the money laundering and terrorism financing risk assessment, also your AML CTF policies and AML CTF program. Your AML CTF compliance officer must be a fit and proper person at management level who is a resident of Australia. They must have enough authority, independence, and access to resources to carry out their role effectively. Your AML CTF compliance officer is responsible for overseeing day-to-day compliance, coordinating the AML CTF program, making sure your business complies with its AML CTF obligations according to both the AML CTF Act and AML CTF rules, helping to create, implement, and maintain internal policies, procedures, and systems for AML CTF compliance, acting as the main point of contact with AUSTRAC, for example, submitting reports or liaising with AUSTRAC about compliance assessments and other requests. Also, reporting to your governing body on AML CTF compliance and money laundering and terrorism financing risk. In your program, you must state who is going to be responsible for implementing feedback from AUSTRAC and who will provide responses when required. This can be something you include in the compliance officer's duties, but it doesn't have to be. You can allocate this to another member of staff. You will need to appoint a compliance officer within 28 days of providing a designated service and notify AUSTRAC within 14 days of any changes to this role. AUSTRAC recognises that for smaller businesses, such as sole traders, the board, senior manager, and compliance officer may have to be the same person. However, within your AML CTF program, you must engage, question, challenge, and be accountable for the money laundering and terrorism financing risks your business faces, regardless of its size. Before we move on, I will do a quick recap of what we've covered so far. We've looked at money laundering and terrorism financing risk and the risk-based approach and discussed what an AML CTF program consists of. We've also started to go through some of the core obligations your AML CTF program needs to comply with, including your money laundering and terrorism financing risk assessment and AML CTF policies, personnel due diligence and AML CTF training, your customer due diligence, transaction monitoring programs, and finally, your governance framework and the responsibilities of your AML CTF compliance officer. Reporting certain transactions and suspicious activities maintains the integrity of the financial system and helps our law enforcement agencies in combating crime. I will start with suspicious matter reports. Your business is required to submit a suspicious matter report when you suspect, on reasonable grounds, that a person is not who they claim to be, or that a matter is linked to criminal activity or proceeds of crime. You must report a suspicious matter report within 24 hours for terrorism financing and within 3 business days for all other matters. Now, threshold transaction reports are required for individual cash transactions valued at 10,000 Australian dollars or higher. These reports must be reported within 10 days after the day of the transaction. There's also International Value Transfer Service reports, or IVTS, and they are required for all international transfers of value or value transactions. International transfers of value include the transfer of money, virtual assets, or other property. International value transfer instructions obligations will not commence on the 31st of March 2026, but at a later date yet to be determined. AUSTRAC will develop and consult about rules related to international value transfer service reporting in the near future. Finally, annual compliance reports are annual reports summarizing how you have met your AML CTF obligations in the previous year. You must submit your compliance report between the 1st of January and 31st of March each year. The reports you submit can make a real difference in detecting, deterring, and disrupting criminal and terrorist activities. So it's important you submit them on time. And they need to be accurate to be of value. We analyze these reports to find patterns of criminal activity, including money laundering and terrorism financing. We share this information to help our partners in Australia and overseas to investigate and fight crime. We will provide more information regarding your reporting obligations later in the year once the AML CTF core guidance is developed and been published. Now we'll take a look at the travel rule obligations. If you are a reporting entity that transfers or receives money, virtual assets, or property on behalf of your customers, you may need to collect, verify, and share specific information with other businesses in the transfer. This requirement is known as the travel rule. The purpose of the travel rule is to provide transparency over the parties involved in domestic and international value transfers. This allows businesses to manage their money laundering, terrorism financing, and proliferation financing risks more effectively. It also ensures that information is available to law enforcement and other authorities upon request. Further guidance will be released on the travel rule and how to comply with it. Your AML CTF program must be subject to regular independent evaluation. The conduct and frequency of these evaluations must be appropriate to the nature, size, and complexity of the business, but must be at least every 3 years. Regular evaluations help to ensure that AML CTF programs are aligned with current risks and regulatory standards and provide a vital feedback loop for continuous improvement. Another key aspect of independent evaluations is independence and the requirement for the review to be an objective assessment. An independent evaluation may be conducted by an internal party that's detached from the program's development and operation. However, independent evaluations are more commonly outsourced. Next, we have scope. Your independent evaluation must assess whether you are complying with your AML CTF policies, your AML CTF program meets your obligations, and that it is effectively addressing your money laundering and terrorism financing risks. AUSTRAC expects evaluations to identify any weaknesses or gaps that may undermine a program's effectiveness. To do this, the evaluation should examine or test aspects of the program, considering the business itself, rather than assessing the program as a standalone document. Finally, we have documentation, where a report needs to be prepared and provided by the independent evaluator to your governing body. This report should outline any findings of the evaluation, proposed changes or recommendations, and specify exactly what was reviewed or tested. Without proper documentation, it's difficult to maintain good governance of an independent evaluation process and for AUSTRAC to assess the quality or effectiveness of the evaluation. You must also make and maintain accurate and complete records for at least 7 years. These records provide evidence of your due diligence, your risk management practices, and compliance with your AML CTF obligations. Your records include documents related to your AML CTF program, customer due diligence, transaction records, staff training sessions, and results from internal reviews and independent evaluations. We'll provide more detail on exactly what you need to keep records of once the rules and guidance are finalised. Now I'll hand back to Hayley, who will look into the tipping off provision and reporting groups.
Thanks, Nikki. Further to your AML CTF obligations, there are other AML CTF considerations that you need to be aware of. Tipping off is disclosing certain types of information to another person or party where it could or reasonably where it would or could reasonably be expected to prejudice an investigation. This includes investigations of an offence against Commonwealth, state or territory law and investigations under Commonwealth, state or territory proceeds of crime laws. Tipping off is a criminal offence. The maximum penalty for tipping off is imprisonment for 2 years or 120 penalty units or both. Disclosing information about suspicious activity known as tipping off can help criminals take action to hide or disguise their illegal activities and can prejudice investigations. Businesses play a critical role in disrupting criminal activity and must consider whether disclosing information protected by the tipping off offence would or could reasonably be expected to prejudice an investigation. This includes information that establishes you submitted a suspicious matter report or that a requirement to submit a suspicious matter report has been triggered, that a report has been made or prepared for the purposes of meeting your suspicious matter reporting obligations, including any copies and documents and any document purporting to set out information contained in a suspicious matter report. It doesn't matter whether you are aware that an investigation has started or not. Businesses need to consider the potential consequences that disclosure could have on any current or future investigations. Tipping off can occur if you do not have suitable controls in your business. This includes when sharing information within a reporting group or to a third party. We will look at reporting groups on the next slide. AUSTRAC recommends that you identify what information is held by your business and the situations where disclosing that information would or could reasonably be expected to prejudice an investigation. You will then need to determine what measures you will apply to prevent tipping off when disclosing or dealing with information. You can read more about tipping off on the AUSTRAC website. If you wish to share the costs of compliance with other businesses and fit within the framework established by the AML CTF Act and rules, you may be able to do so with a reporting group. Entities in a reporting group share some or all risk management and compliance arrangements, including those set out in a group AML CTF program. This supports a flexible framework for related entities, including non-reporting entities, to fulfill AML CTF obligations on behalf of reporting entities within the group. Every reporting group must have a lead entity to oversee implementation of AML CTF obligations across the reporting group and implement some group level policies. Depending on the circumstances, a reporting group may either be elective or created by an operation of law and will consist of entities with shared risk management and compliance arrangements that follow a group AML CTF program. As mentioned in our introductory webinar, AUSTRAC is developing sector-specific AML CTF starter program kits for small businesses. The kits will provide a comprehensive AML CTF program for a typical low complexity small business in the various sectors and reflect sector-wide money laundering, terrorism financing, and proliferation financing risks and industry practices. We recognise that for businesses in the newly regulated sectors, all of these obligations are new. For many, the concept of money laundering and its connection to crime may be new as well. We do not expect newly regulated businesses to be perfect at identifying and controlling for money laundering risks from day one. We do expect honest efforts to meet your obligations and report suspicions to AUSTRAC. We have published our expectations of new reporting entities come 1 July 2026. They are as follows. Be enrolled as a reporting entity. You'll be able to access the online enrolment system from 31 March 2026. Have an AML CTF program in place, either because you have adopted the starter program provided by AUSTRAC or have developed your own. Have an AML CTF compliance officer appointed. Have trained your staff on your AML CTF program and processes, and be ready to ask your customers questions and report suspicious activity. After 1 July 2026, AUSTRAC will focus its enforcement in the newly regulated sectors on entities who willfully ignore the obligation to enrol and or who we suspect are complicit with or willfully blind to money laundering in their business. One important step you can take now is to review your business's existing processes and daily operations. Many of you may already have established policies and procedures that align either partially or fully with certain obligations under the AML CTF regime. By assessing what your business currently does and how effectively these practices meet the new requirements, you'll gain a clearer understanding of what needs to be adjusted or reinforced. For example, do you already identify and verify your customers? If so, are your current verification procedures compliant with AML CTF obligations? You might find that your existing processes meet the initial customer due diligence requirements for low-risk customers. However, to ensure full compliance, you may need to clearly document these procedures and implement additional measures for medium and high-risk customers. And lastly, stay informed about AUSTRAC's new education initiatives and resources by visiting the Education and Guidance page on the AUSTRAC website. Let's walk through the next steps in your introductory journey. This slide maps out where you might be up to on the AML CTF Essentials checklist. We encourage you to review all the webinars in this AML CTF Essentials series. We have seen a few early enrolments so far. However, our current forms do not yet include newly regulated industries and services. It's important to enrol with the correct services, as we mentioned earlier, as these impact reporting obligations. AUSTRAC will provide updated guidance and forms ahead of the new obligations taking effect. To stay up to date, we suggest subscribing to reform updates on the AUSTRAC website. You will also find a list of key dates on our reform page and further details about our education initiatives and resources on the Education and Guidance page. We have referenced a number of key legislative dates today, and you can see these reflected now on the slide. The reform page on the AUSTRAC website also has these key dates listed and will be updated in line with any changes. You will receive important information, including any changes to key dates, if you have subscribed to the latest updates about the AML CTF legislative reforms. As mentioned earlier, we are from AUSTRAC's Industry Education and Outreach team. Our team will be delivering significant education for new reporting entities ahead of your obligations coming into effect in 2026. And this brings us to the end of webinar 2, AML CTF obligations. We sincerely hope that you have found this webinar valuable and encourage you to view all of the webinars in this essential series. Thank you for joining us today.